All right, let's just imagine for a second. You're in the exam room. You turn the page, and there it is, a GST question that looks simple, but you know it's a trap. It's a classic ICAI move, and it trips up so many students. Well, today, we are going to crack the code on one of the biggest ones, place of supply. Okay, so let's dive right in. Take a look at this question. An architect in Mumbai, a company in Bengaluru, a property in Goa. Seems pretty straightforward, right? Wrong. I'm telling you, this is designed to make you second-guess everything. This is ICAI's bread and butter, and the answer has nothing to do with just spotting where the property is. So let's pull this thing apart piece by piece.
So what's the big deal? Why is this chapter so important? It really boils down to one simple question. What is the nature of the supply? Is it happening within a state, or is it going between states? Because that one little detail, it changes everything.
I mean, look at this. On the surface, it seems super easy. If the supplier and the place of supply are in the same state, boom, intrastate. You charge CGST and SGST. If they're in different states, easy, interstate, and you charge IGST. The entire game, the whole puzzle we're trying to solve, hinges on that one little phrase, place of supply. And if you think this is just theoretical, think again. This quote from the material says it all. If you get it wrong, it's not a simple correction. You have to pay the right tax, then go through a whole painful process to get a refund for the wrong tax you paid. We're talking about procedural nightmares, and even worse, your client's working capital gets completely blocked. ICAI loves testing this because they know the stakes are high.
So, the question is, how do we solve our little mystery and sidestep this classic exam trap? Well, the answer, the master key to unlocking all of this, is figuring out the place of supply. And to get that key, we first need to find two other golden keys.
And here they are, the two golden keys: location of the supplier and location of the recipient. Now listen, you cannot just skim these definitions. You have to know them inside and out. They are literally the foundation for everything else. So let's break them down. First up, the location of the supplier. Now, you might think, oh, that's easy. It's just where their office is. But nope. The GST law is super specific about this. It gives us a clear step-by-step hierarchy, and you have to follow it in order. So here's how it works. You always start at the top. Step 1. Is the supply made from their registered place of business? If the answer is yes, you stop there. That's your location. If and only if the answer is no, do you move on to step 2, the fixed establishment. You can't skip ahead. Just think of this as a checklist for every single problem you face.
Okay, that was key number 1. Now for key number 2, the location of the recipient. And the good news is the logic here is pretty much a mirror image of what we just learned for the supplier. It's the same idea, a strict legal hierarchy you've got to follow.
You do the exact same thing. Where is the service being received? You start with their registered place of business. If that doesn't work, you move down the list. Seriously, getting a handle on these two hierarchies, one for the supplier, one for the recipient, is absolutely non-negotiable if you want to score well in these questions.
Okay, so you've got your two keys. You're feeling confident. But wait, there's a final twist. And this, my friends, is the trap. This is where ICAI loves to catch students out, especially in those tricky MCQs. See, not all transactions are the same, and ICAI absolutely loves to test whether you know the difference. The whole game changes depending on one simple thing. Are we talking business to business or business to consumer? So, what's the difference? It's actually pretty simple. B2B, business to business, is when the recipient is a registered person. Think of it this way. They can claim input tax credit, or ITC. B2C, on the other hand, is when the recipient is an unregistered person like you or me buying something for personal use. No ITC available. This distinction is everything, because for B2B supplies, the default rule points straight to the recipient's location. All right, we've got our keys, we know about the B2B versus B2C trap. It's time to go back to that original mystery and solve it once and for all. Let's put our new knowledge to the test. Okay, let's break down the facts from our case. Number 1, where's the supplier? Mumbai, Maharashtra. Got it. Number 2, where's the recipient? A registered company in Bangalore, Karnataka. Okay. Now, number 3, and this is the most important part, is the recipient registered? Yes! The question explicitly says it's a registered company. Ding, ding, ding! That makes this a B2B supply. That whole thing about the property in Goa, that's the shiny object meant to distract you. And here's the rule that cracks the case. For B2B services like this, the default general rule is that the place of supply is simply the location of the recipient. It just makes sense, right? That's where they're registered, and that's where they'll be claiming their ITC. So let's line it up. Location of the supplier, Maharashtra. Place of supply, which is the location of the recipient, Karnataka. Are those the same state? Nope, they're different.
And since they're different states, it's an interstate supply. And what tax do we levy on an interstate supply? IGST. That's it. Mystery solved. See? When you follow the steps and don't get distracted, you walk right past the traps and straight to the correct answer.
Seriously, just burn these 4 questions into your brain for any place of supply problem. Just ask yourself, 1. What's the supplier's location? Use the hierarchy. 2. What's the recipient's location? Use the hierarchy. 3. Is the recipient registered or unregistered, B2B or B2C? And 4. Then apply the rule. This step-by-step process is your shield against confusion.
Okay, now for the important stuff. Let's get to our first and, honestly, most critical specific rule. This is the one that deals with immovable property under Section 12.3. And listen, the scope here is way bigger than you might think. It's not just about building something. We're talking about services from architects, interior decorators, surveyors. It covers staying in a hotel or a guest house. It even includes renting a hall for a wedding or a conference. If the service is on this list, the rule is crystal clear. The place of supply is wherever that property is located, period. But wait, this is so important. ICI absolutely loves to throw in a twist using this little proviso. If the property in question is located outside of India, the whole rule flips on its head. Suddenly, the place of supply becomes the location of the recipient, not the property. So, think about an Indian architect designing a hotel in Dubai for a client in Mumbai. The place of supply would be Mumbai, not Dubai. You have to mark this down. This is an absolute goldmine for MCQs. Next up, let's tackle 2 sections that are like confusing cousins, Section 12.4 and 12.5. They both deal with services that are performed, but the rules are dangerously different. And believe me, this is another classic exam trap. Okay, pay close attention, because this is where people get tripped up. For personal services under Section 12.4, we're talking fitness, beauty treatments, personal grooming. The place of supply is always where the service is actually performed. That's it. Simple. But for training and performance appraisal under 12.5, it depends. If the client is a registered person, the place of supply is the client's location. If they're unregistered, only then is it the place of performance. See that little difference? That's a favorite for both descriptive questions and MCQ.
Today, we're going to diffuse one of the biggest traps that ICAI just loves to set in your exams. Let's dive right in. Okay, no warm-up, let's go. Here is a classic exam-style question. You've got Mr. Sham, he's unregistered, and he books a return ticket Delhi to Mumbai and back. Now, the question is simple. For that return leg, the Mumbai to Delhi part, what's the place of supply? Just take a second. What's the first answer that pops into your head? And if your brain immediately said New Delhi, because hey, that's where the whole trip started, then I'm sorry to say you've just walked straight into a very common, very effective trap. This is exactly where students lose easy marks, and believe me, the examiner knows you're likely to make this mistake. But hey, don't worry, that's exactly why we're here. The whole point of this is to break it down, so that in the next few minutes, you'll be able to spot this trap and others just like it from a mile away. Let's make sure this never costs you marks again.
All right, let's get right to the heart of it. Why is this whole return journey thing so tricky? Well, it all boils down to one very specific line in the law.
And here it is. This is the sentence that causes all the confusion. The law explicitly says a return journey is treated as a, say it with me, separate journey. It does not matter that you bought one round-trip ticket. For GST purposes, Delhi to Mumbai is one supply, Mumbai back to Delhi is a completely different supply. You have to get that into your head.
Now you might be thinking, okay, separate journey, got it, but why is this such a big deal? It's just the location, right? Well, in the world of GST, that location, the place of supply, it is everything. It's the master key. Because think about it, if the supplier and the place of supply are in 2 different states, it's interstate and you levy IGST. If they're in the same state, it's intrastate, so you levy CGST and SGST. If you get the place of supply wrong, you apply the completely wrong tax. And in an exam, that's not partial credit. That's a 0 for the question. It's that critical.
So, now that we know why it's so important and we know what the trap is, let's finally look at the actual rule that gives us the right answer. This all comes from Section 12, subsection 9.
You know, the rule is actually pretty straightforward once you push that return ticket idea out of your mind. For any unregistered person, the place of supply is simply where did they get on the plane, the train, the bus for that particular trip. The key word is embarks. Where did that specific leg of the journey start? So, let's bring it back to Mr. Sham. His first journey, Delhi to Mumbai. Where did he embark? New Delhi. Simple. The place of supply is New Delhi. Now for the return journey, Mumbai to Delhi. Where did he embark for that journey? Mumbai. So the place of supply is Mumbai. That's it. The answer to that first question was Mumbai. And please, burn this exam tip into your memory. A return journey is always, always, always a separate journey.
Okay, awesome. We've cracked the return journey trap. But IKI has another little curveball they like to throw, and that's when stuff is supplied on board a flight or a train. A lot of students get the rule for goods, like buying a sandwich, mixed up with the rule for services, like paying for Wi-Fi.
Now look at this because the logic is different. For goods, something you can touch, the place of supply is where those goods were physically loaded onto the plane. Makes sense. But for services, things you can't touch, the law needed a different anchor, and that anchor is the first scheduled departure point of that entire conveyance. So if your flight is from Delhi to Mumbai and then on to Chennai, the point for the service is always Delhi.
And I can almost guarantee you'll see an MCQ testing this. They'll ask for the place of supply for a movie you watched on board, and one of the options will definitely be the city where the food was loaded. They are checking if you know this very specific difference. Don't give them the satisfaction. For services, it's the journey's first origin point. Period.
Now, so far, we've mostly been talking about guys like Mr. Sham, an unregistered person. But honestly, the absolute first question you need to ask yourself in any place of supply problem is this: is my recipient registered under GST or not? Because the answer changes absolutely everything.
It's like there are two different rule books. If the person is unregistered, we use the rule we just learned. It's all about the place of embarkation. But if the recipient is a registered company buying a ticket for its employee, the rule flips completely. The place of supply becomes the location of that registered person. It's their office address. The flight details, where it starts, where it ends, suddenly none of that matters.
Here it is, your 3-step plan to beat the examiner. Number 1, always start by asking registered or unregistered. That tells you which rulebook to even open. Number 2, if it's a return journey problem, immediately, in your head, split it into 2 separate trips. And number 3, if the question is about a service on board, your anchor is the very first departure point of the whole journey. Follow these 3 steps and you won't go wrong.
Okay, so to wrap this up, let me leave you with a final brain teaser. We've mastered passenger transport, but what about this? An unregistered person buys travel insurance in Mumbai for their flight from Mumbai to Delhi. So, is the place of supply governed by the transport rules we just learned or by the rules for insurance? See, the real secret to GST is always identifying the correct service category first. Think about that one. Keep questioning, keep digging, and you are going to crush this exam.